The S&P 500 just hit all-time highs. So what does that mean? Here's exactly what I'm telling my clients right now. First off, this headline sounds big, important, and maybe even a little scary, but it's mostly built to attract eyeballs, and it works. But here's the reality. The S&P 500 actually hits record highs a lot. Historically, about 16 times per year on average, to be specific. So it's not some once-in-a-decade event. Where it does get interesting is when you look at valuations, basically how expensive stocks are compared to the profits that companies are making. Right now, markets are on the pricier-ish side, but we're not anywhere near the crazy expensive levels that we've seen in the past. One way that we measure this is with something called the Shiller-Cape ratio, which looks at earnings over the past 10 years and smooths out the short-term noise. To see how pricey the market is, we can compare today's Cape ratio to its 20-year moving average. This has historically been a good guide for long-term return potential. Two times in history really stand out. Just before the Great Depression, and during the late 1990s internet or tech bubble. Those were extreme levels. We're not there right now. Here's a simple takeaway on valuations. When valuations are high, future long-term average returns are statistically likely to be lower. That doesn't mean losses. It just means that you're more likely to get below average gains in the years ahead. For example, instead of seeing maybe 10% plus annual returns for the next decade, you might see something more modest if valuations stay high. So what do I tell my pre-retiree and retiree clients? That we're in a market where prices are on the higher side, but not alarmingly so, but high enough that it's prudent to temper future expectations. Those expectations matter a lot for your big decisions. So your investment mix, when you retire, whether you make a large purchase, and so on, all determined by our future expectations about return potential. So yes, the S&P 500 just hit new highs, but that's a small piece of the bigger story. The more relevant insight to high prices is that valuations are somewhat elevated, which means it's smart to plan ahead with a clear-eyed view of what the next decade might bring. If you're planning to retire soon and think that a short, complimentary video showing where you stand financially would be valuable, click the link below and answer just a few questions. I'll send it to your inbox within a few business days. Have a good day.